Welcome back to the deep dive. Today we are focusing on a single date on the calendar.
Hmm.
It might just look like a standard Friday to most people, but if you're following the flow of money in tech, it is just flashing red. January 30, 2026.
It does feel like a countdown is running, doesn't it?
It really does.
Hmm.
We have a stack of documents here. We've got reports from Bloomberg, analysis from Barron's, filings,
Even some tweets.
even tweets, yeah, that all seem to triangulate on this one day. And if the experts are right, we aren't just looking at a news headline. We're looking at a seismic shift in the financial markets. We're talking about the Starlink IPO.
And we have to set the stage on the scale here immediately. We are not talking about some little app going public.
No.
We are looking at a quote from Fortune magazine in the research, and it describes this as potentially being larger than any IPO valuation in history.
Which is, that's a staggering claim. History covers a lot of ground.
Sure does.
We've seen Saudi Aramco, we've seen Alibaba. To even be in that conversation is massive. But here's the thing that really hooked me when I was prepping for this.
Okay.
Usually when we talk about these mega IPOs, the story for you, the average listener, is just sit down and watch.
Right. Wait for the bell.
Exactly. The big institutions get the early shares, the VCs cash out, and the retail investor gets to buy in once the price is already, pop.
Mm-hmm.
But buried in this research is something different, a secret, or really more of a backdoor.
It's a mechanism.
Hmm.
It's a way to get exposure to Starlink right now, today, before any opening bell even rings.
And the barrier to entry, that's what got me.
It's not $1 million buy-in.
Yeah.
The source lists it as little as £100.
That is the actionable piece we are absolutely going to get to. So the mission for this deep dive is pretty clear. We need to stress test this January 30 date. Is the evidence actually there, or is this just the rumor mill spinning? We need to break down exactly what this backdoor investment vehicle is, and we need to have a serious debate about the business itself. Can Starlink really disrupt a $2.18 trillion industry, or is this just classic Musk hype?
It's a lot to unpack, but the evidence is, surprisingly concrete.
Yeah.
We aren't just reading tea leaves here.
No.
We're looking at corporate restructuring moves that Bloomberg reported on and strategic necessities highlighted by Barron's.
So let's start with the detective work. January 30, 2026. Why is this date significant, and what's the smoking gun that makes analysts think the trigger's about to be pulled?
To understand the timing, you have to look at the plumbing, the corporate plumbing.
Okay.
Bloomberg released a report that highlighted what it called Exhibit C. Now, it sounds dry, but it's the kind of detail that makes financial analysts spill their coffee.
Okay, walk us through Exhibit C. What did they find?
The report details that SpaceX has been systematically moving the satellite unit's assets.
Everything related to Starlink.
Everything. Moving it into a wholly owned subsidiary.
I want to pause there because that sounds like, standard corporate shuffling. Why is moving assets to a subsidiary a big deal? Why is that a signal?
Because it is a massive headache.
Huh.
You don't do it for fun, and you don't do it for tax reasons alone, usually.
Mm-hmm.
Think about the logistics. You have thousands of satellites, ground stations, user terminals, IP, employment contracts. To legally transfer all of that from SpaceX, the parent, to Starlink, the subsidiary, takes lawyers, time, and a lot of money.
So you're saying you only go through that pain if you have a very specific goal in mind.
Exactly. You do it to sever the limb. Imagine you live in a big house and you want to sell just the guest cottage in the back.
Right.
You can't sell it if it's on the same deed as the main house. You have to subdivide the lot. You have to give it its own address, its own utilities. That is what SpaceX is doing. They are packaging Starlink into a neat legal box.
That's a great analogy. So the subsidiary is the guest cottage getting its own deed.
Precisely. And in the corporate world, this packaging phase is almost always the precursor to a spin-off or an IPO. It's the logistical getting ready phase.
You don't pack the boxes unless you plan to move.
You got it.
Okay, so the boxes are packed. The for sale sign is ready in the garage, but just because you can sell the house doesn't mean anyone wants to buy it or that the market is right. We've seen plenty of tech IPOs where the company tries to go public and then investors look at the books and just realize the company is bleeding money. Is Starlink actually making money?
That is the second pillar of the evidence. And for this, we don't need a leaked report. We have it from the horse's mouth.
Or the bird's mouth, I guess.
Right. The tweet Elon Musk posted, excited to announce that SpaceX Starlink has achieved break-even cash flow. Excellent work by a great team.
Now, I know break-even doesn't sound as exciting as, billions in profit. But in this context, why is that specific phrase, break-even cash flow, so critical?
because the satellite business is historically a graveyard. We have to remember that.
Right.
In the 90s and early 2000s, companies like Iridium and Globalstar went bankrupt trying to do this. Launching rockets is basically setting piles of cash on fire to get infrastructure into space. For a long, long time, Starlink was just a cash incinerator.
So break even means the fire is out.
It means the business is self-sustaining. It means the subscription revenue from the farmers, the RV owners, the maritime users, it's finally enough to pay for the rockets and the satellites.
It stops the bleeding.
It stops the bleeding. And for an institutional investor, a big pension fund or a bank, that is the green light. They are fine with zero profit if the growth is there, but they hate negative cash flow.
And speaking of growth, the scale he mentioned in that same update was pretty wild.
It's monopoly-level stuff. Musk noted that Starlink is now a majority of all active satellites. Think about that.
More than half.
More than half. One company owns more than half the active infrastructure in orbit. And he added that by next year, they will launch a majority of all satellites cumulatively from Earth.
That is just its dominance, pure and simple. Okay, so we have the logistical prep with the subsidiary. We have the financial stability with the cash flow. But I want to play devil's advocate.
Please do.
Elon Musk is the richest man in the world on paper. He runs Tesla, SpaceX, Neuralink, XAI. I mean, he has a lot on his plate. Why does he need to sell Starlink? If it's finally self-sustaining, why not just keep it private? Why invite the headache of public shareholders, quarterly earnings calls, SEC regulation? Why not just keep the cash cow in the barn?
This is where the story gets really interesting. It moves from logistics to strategy.
Yeah.
And to understand the why, you have to look at the Tesla problem.
The Tesla.
Now, Barron's analysis in our stack calls it the pressure valve theory.
Okay, break that down for me.
Think about the nature of Musk's wealth. It's astronomical, but it's almost entirely illiquid. It's tied up in stock.
Right.
He can't go to the grocery store and pay
Yeah.
with a share of Tesla.
He's asset-rich, cash-poor, relatively speaking.
Exactly. Now, historically, whenever he has needed massive amounts of cash, for example, the $44 billion to buy Twitter, where did he go to get it?
He went to his piggy bank. He sold Tesla stock.
And we saw what happened. Between April and December of 2022, he unloaded about $23 billion worth of Tesla shares. And what did the market do?
It panicked. I remember that. The stock tanked.
It tumbled more than 50%. When the CEO is selling that aggressively, it floods the market and it scares the living daylights out of investors. It destabilizes the company.
Yeah.
Barron's makes the point that he cannot keep treating Tesla as his personal ATM. It's too dangerous for the car company.
So he needs a new ATM.
Precisely. That is the strategic rationale. As Barron's puts it, what Musk really needs is another publicly traded company. If he spins off Starlink, suddenly he has a new currency.
I see. So if he needs, say, $5 billion to build a city on Mars or to fund Neuralink, he can sell Starlink shares instead of Tesla shares.
Correct. It unlocks his wealth without hurting the Tesla stock price. It acts as a firewall. It protects his existing empire while allowing him to expand the new one.
It's a defensive move for Tesla shareholders just as much as it is an offensive move for Starlink.
It is.
That makes incredible sense. It aligns all the incentives. Tesla investors want him to stop selling. Musk wants liquidity. Starlink is the solution.
And that strategic pressure is why analysts think January 30 isn't just some random date. It's a deadline driven by necessity.
Okay, so we've established the when, January 30, the how, the subsidiary transfer, and the why liquidity without hurting Tesla. Now let's pivot to the part that I think is most exciting for the listener who doesn't have $1 billion to invest. The back door.
The free ticker.
Right. Usually getting into a pre-IPO company like Starlink is impossible for normal people. You have to be an accredited investor. You need connections. You need minimum check sizes of, what, $500,000?
At least.
But our sources highlight a workaround. What is this Scottish Mortgage Investment Trust?
I know, the name is terrible, right?
It sounds like a bank from a Charles Dickens novel. The Scottish Mortgage Investment Trust. It sounds so dusty.
It was founded in 1909, so it is dusty in that sense. But don't let the branding fool you. This is one of the most aggressive, forward-looking tech funds on the planet.
So what exactly is it? Is it a mutual fund? An ETF?
It's an investment trust, which trades on the London Stock Exchange. So think of it like a publicly traded company whose only business is owning shares in other companies.
Okay.
But unlike a typical fund that just buys Apple or Microsoft things you could buy yourself, this trust has a special mandate. They can invest heavily in private equity.
Meaning companies that haven't gone public yet.
Correct. They use their massive size to get into deals that you and I can't access. And according to the reporting, they have a significant stake in Starlink.
So if I buy a share of this trust, which has a ticker symbol, I can buy it on an app. I technically own a piece of Starlink.
Indirectly, yes. You own a share of the trust, and the trust owns Starlink. So the logic is, if Starlink announces this IPO on January 30, and the valuation is larger than any in history.
The trust's assets jump up in value.
Exactly.
Ah.
And theoretically, the share price of the trust should jump up to reflect that.
It's a way to front-run the IPO.
It's getting a seat at the table before the reservation line opens. And the entry point mentioned in the source is around £100 per share for the trust. It democratizes access to what is usually a billionaires-only club.
But tell me about the other things in the basket. Because if I buy the trust, I'm not just buying Starlink, right?
Yeah, that is the catch and the benefit, depending on how you look at it.
Yeah.
You are buying the whole portfolio.
Right.
But the portfolio is fascinating. The sources list that the trust also holds stakes in ByteDance.
The parent company of TikTok.
Right, and Anthropic.
The AI lab.
Exactly. One of the main competitors to OpenAI. So you have the leader in space internet, the leader in social video, and a leader in artificial intelligence, all in one basket, all pre-IPO.
That is a powerhouse lineup. It's basically a bet on the next generation of tech giants.
It is. But you have to be aware of the risk. If TikTok gets banned in the US, or if Anthropic loses the AI war, that drags down the value of the trust. Even if Starlink does great,
You're diluting your bet.
you're not getting pure Starlink exposure.
That's a crucial distinction. It's not a magic bullet, but it is an accessible play.
And it's a play you can make now, whereas waiting for the IPO means you're fighting for scraps on listing day.
Let's shift gears and talk about the prize. We've talked about the stock, but what about the company? The sources throw around this number, $2.18 trillion. That is the size of the telecom industry Starlink is attacking.
There's a massive pie.
And there's a slide here that makes a really bold comparison. It says Starlink could be bigger than AOL's internet via dial-up, Earthlink's DSL, or Comcast's cable internet. In fact, it may be bigger than all three combined.
It sounds like hyperbole, doesn't it? Comparing it to AOL.
It does. AOL is a dinosaur.
But the comparison is about the nature of the infrastructure. Think about AOL, Comcast, Earthlink. What do they all have in common?
They use wires.
They are tethered to the Earth. They're limited by physics and geography. If you are Comcast, you have to dig a trench to a customer's house to sell them internet.
Right.
If that customer lives on a farm 10 miles from the main road, you aren't digging that trench. It's bad business. You lose money.
This is the last mile problem that has plagued telecom for 100 years.
Exactly. Starlink deletes that problem. The satellite is already flying over that farm. It costs Starlink effectively $0 marginal dollars to serve the farmer in Nebraska versus the banker in London. The infrastructure is global by default.
So they unlock customers that no one else can profitably reach.
That's the key. They aren't just stealing customers from AT&T. They are creating new customers. The source mentions unlocking trillions of dollars of currently untapped economic potential.
And that's the billions of people offline.
Billions of people in businesses that are currently offline or just stuck with terrible connections.
And it's not just rural households. Bloomberg cites robust demand for communications via space from industry.
Right. Think about maritime shipping.
Yeah.
Maersk, Carnival Cruise Lines. Think about aviation. Airlines are desperate for high-speed Wi-Fi. The military. These are customers that cannot run a fiber optic cable. They need space-based internet.
And Starlink is the only game in town at that scale.
For now, yes.
Yeah.
Amazon has Project Kuiper coming, but they are years behind. Starlink has the constellation up now. That first-mover advantage in a winner-take-most market is why the valuation could be so historic.
It's the utility argument. It's not just a tech company, it's a global utility.
Exactly. If they capture even a small slice of that $2.18 trillion telecom spend, the revenue numbers get silly very fast. That's what investors are salivating over.
So bringing it all back to you, the listener, we have a convergence of factors here. We have the technical dominance majority of all satellites.
Yeah.
We have the financial turning point cash flow positive.
Tech.
And we have the strategic necessity Musk needs a pressure valve for Tesla.
And we have the date, January 30, 2026.
So if you're listening to this and thinking, okay, this sounds real, the takeaway is that the clock is ticking, the corporate machinery is already moving assets.
And the back door, via the Scottish Mortgage Investment Trust, is the tool available if you want to position yourself before the news breaks. It's about being proactive rather than reactive.
But again, do your own homework. It's a basket of stocks, not a direct line.
Always.
Before we close out, I want to leave our listeners with one final thought. We touched on the pressure valve concept saving Tesla from Musk selling. But I wonder if there is a deeper shift happening here.
I've been thinking about this too.
For the last decade and a half, Tesla has been the sun in the Elon Musk solar system. It was the favorite child. It was the source of his wealth, his fame, his power. But if Starlink goes public...
If it truly becomes larger than any IPO in history.
Exactly. If Starlink becomes the reliable cash-printing utility and Tesla remains the volatile car company fighting a price war with China, does the hierarchy flip?
That's the provocative question. Does the crown jewel of the empire change hands? If Starlink becomes the primary source of liquidity, the new ATM, does Musk's attention shift? Does his protection shift?
It's a fascinating dynamic. If you're a Tesla shareholder, you might be relieved he stops selling your stock. But you might also be worried that you're no longer the most important company in the portfolio.
We might be witnessing a changing of the guard. The king is dead. Long live the king.
Well, we will certainly be watching on January 30 to see if the coronation begins.
It's going to be a wild month.
It always is. Thank you for walking us through the data today. And thank you to everyone listening. We've linked the sources, including that Bloomberg report and the details on the Scottish Mortgage Investment Trust in the show notes if you want to dig in deeper.
Definitely worth a read.
Until next time, keep your eyes on the stars and the stock ticker.